Hi everyone, welcome to Trader Chats, unique perspectives from seasoned traders. I'm your host, Imran Lakha, founder of Options Insight and 20-year professional options trader. As you might know, I became a trading mentor about 3 years ago, but I thought these conversations would be a great way for my students to gain valuable perspectives from some of the professional traders that I know and respect. I hope you enjoy the episode. Welcome back to Trader Chats, everyone. Today's episode is called Tracking Bitcoin Cycles. And I've brought back a good friend of mine, Kay, who you may remember from last season's podcast, where we talked about the wisdom of charts. Kay has been doing technical analysis for pretty much his whole career. He's definitely my go-to person when I want to talk about charts and cycles and things like that. So Kay, welcome back to Trader Chats.
Thanks for having me back.
No, good to see you, man. So last time we did touch, obviously, on cycles being a major kind of component of your process when you look at markets, right? And you pretty much described it as your first layer. You try to identify these cycles, and then you have various other layers on top that tell you about what market regime you believe we may be in, and then in terms of how you generate levels for entry points and things like that, and maybe scenarios from Elliott wave, right? So things like that. And we went into fairly decent detail in our last chat. Now, something that historically hasn't really been on your radar very much is crypto. And that's because I know you love a rich data set, right? Because you're a bit of a statistician, and we've only got 12 years of history in Bitcoin, right? So I know that was one of your major gripes with even looking at crypto. But in recent times, it sounds like you have got a bit more stuck into the data in Bitcoin. And you mentioned to me that, and your exact words were, this looks like the most cyclical asset I've ever seen. So I was really keen to bring you back and find out what have been your observations looking at this data, and what type of things are you noticing, and could you share it with us basically?
Yeah, well, as you said, right, we only have just over 12 years of data, and that's not a heck of a lot compared to some of the other financial time series we'll look at. But even in that short time period, there are some very interesting observations to be made. Certain things that will definitely be interesting to keep an eye on in the near future. So I think, yeah, we're gonna share some images today just to give a flavor of some of the things that are possible.
That's a very good point. So if you are listening to this on a podcast, we will be sharing some charts on screen. So the best venue to be watching this is definitely my YouTube channel, where we do a video cast, and obviously Kay's going to do some screen sharing. If you can't watch it on YouTube, then we will also have a link to Kay's blog, which he posts on Medium, and he'll post some of the charts on there, so you can have a look at the visuals around what we're talking about. But back to you, Kay. Sorry to interrupt. So yeah, what are you seeing?
Okay, yeah, probably best just to dive in. So one thing that is quite immediately observable is that there seems to be an interesting 580-day periodicity in the detrended price series of Bitcoin. What I mean by that, detrended, that is, think of it as a momentum indicator, right? One moving average minus a short moving average minus a longer moving average divided by the long moving average. Some people just call it a relative price oscillator. That's typically what you use in cycle analysis of financial time series where there's a trend. You want to remove the trend out so you can focus on the relative swings, the relative ebbing and flowing within that price series.
So the changes in momentum basically is what you're identifying.
Yeah, you can think of it that way. So where you tend to get momentum peaks and momentum troughs.
Okay. Yeah.
Right. And essentially what you're trying to find is if there is, or certainly has been, right? Has there been some sort of pattern in the occurrences of those peaks, or certainly of those troughs, right? And that's what you will hear psychoanalysts refer to as cycle beats, those troughs. Is there some sort of periodicity? Is there some sort of pattern to when those troughs have occurred throughout history? So, I mean, at the end of the day, it's always a historical analysis, right? So we're describing what has been. And then, of course, if you're going to act on it, that's just, you are driving with your view clearly in the rearview mirror. But that, if you have the right implementations, that will obviously protect you from times where you're wrong.
You're basically saying that the cycle has repeated historically. So my base case is that it will continue to repeat, basically, right? That's kind of, which is a fair enough assumption, right? As a base case, I guess. Yeah.
You use what you can.
Yeah.
Right. So I think maybe if we take a look at what this 580-day cycle looks like in Bitcoin, that might I just find looking at the actual pictures themselves leaves a lot of the explanation.
And what are you using to kind of identify this cycle? What type of analysis?
So you can use spectral analysis, spectral density estimation. It comes with a lot of different names. But essentially, if you can picture what a detrended price series will look like, so a momentum indicator, MACD, for example, right? And then imagine a very basic version of it, which would be a very simple sine wave. Right. A very simple sine wave would be the most predictable momentum oscillator on the planet. Right. Yeah. So it just goes like this, right?
Exactly.
In a uniform. You know the amplitude, you know the frequency. Exactly. You know everything about it. So from that, you can also imagine you could create, using sine waves of different frequencies, different amplitudes, you could create what looks like a momentum indicator. Anything, all sorts of various things, but just combining sine waves of different frequency, different amplitudes. So you just get this squiggly line with some sort of periodicity in it.
So could you show that on screen?
Yeah, why don't we? Why don't we go to Wolfram Alpha. This is Wolfram Alpha. If you ever got some math homework and you're stuck on something, go to Wolfram Alpha. They'll help you out. One of the things they have there is plotting functions. And here we just plotted a sine wave.
Yep.
Right. And that would be
that from GCSE maths.
There you go. That could be your most predictable, most simplest, most basic momentum indicator. Now think of combining that guy with other sine waves, cosine waves, whatever you want to call it, and would end up getting something that's more squiggly. Right? For example, we could change the frequency, right? We change the frequency of the sine wave. Boom. And what does that do? You find you start getting a lot of more of them within a time period. You could drop that to a different number and you get the idea. But what happens if, say, for example, we start adding in more sine waves or sinus waves? A whole lot of different things start happening. You start getting more structure.
More squiggles, basically, right? So it's a
Let's call it more,
yeah. And that bottom one's starting to look much more like what an RSI indicator on a stock might look like, basically, right?
Exactly. right? So you could continue that exercise, of course, and just create all sorts of wonderful shapes, etc. So now if you think of what a momentum indicator actually looks like, and imagine decomposing it into the individual components of the sine waves.
Interesting.
And then focusing on, let's call it the ones that correlate best, or most dominant ones, with that pattern of ebbing and flowing within the momentum indicator.
The swings in the momentum indicator, basically.
Yeah.
Okay.
That's, I would say, is the layman's way way to describe estimating a spectral density. Because at the end of the day, you want to identify what are those strongest frequencies within this price series or within this series.
So if I understand it, spectral analysis or spectral density analysis, whatever you're calling it, is a way of decomposing a squiggly line or oscillator, let's say, a momentum indicator, into the most dominant sine waves. And maybe you can pull, what are we talking about? Is it a case of there's like 5 of them? Is there like 2 of them? Like how many dominant sine waves are you looking for? Because surely if you have too many, then it kind of makes the analysis a bit pointless, right? You're trying to identify.
We're going to take a look.
2 or 3, I guess, right? Or not?
Yeah, we'll take a look at a few other things, right? So because you're trying to estimate the frequency, you literally go through an entire range and you plot a histogram, which shows you just how much each frequency contributes to that series. And you will see if they are, right, if they are dominant frequencies, you will find that there are peaks on that histogram at those points. You'll find peaks there.
Okay.
Of course, if your series is, say, what you'd call white noise, if it's purely random, your histogram would be perfectly flat.
Yeah, there'll be no dominance.
There'll be nothing dominant, right? Just you imagine something that's just perfectly flat. Nothing dominates over any of the others, right? If, however, it was just a very basic sine wave, so there's one frequency, you'd find your histogram is just 0 everywhere, except at one point where it just spikes up and goes back to 0.
Right.
But if you had a combination of 2 sine waves, 2 different frequencies, your histogram would have 2 peaks.
Yeah. Makes sense. Okay.
The sort of things we're looking at, it can look like a mess, right? It could look like an absolute mess, which just means nothing.
Okay.
So that's where, if there is something, there are some techniques that can actually help you find cycles worth investigating. But those are conversations for another day, right? But that is the basic starting point. So I think maybe looking at some examples, as we'll use the Bitcoin price series, and just briefly talk through the process, and that might help. That might help with a little bit of understanding.
Okay, let's have a look.
All right. Okay, so here we're looking at the entire recorded history of Bitcoin. That's the black line in the background. The blue is the detrended oscillator we mentioned.
Yeah. So that detrended oscillator is the momentum indicator, basically, right?
Exactly.
It's trying to show you the ebbs and flows of momentum in Bitcoin. And you can see when that momentum goes really high up, it usually coincides with a spike in price. And when it comes down, it usually coincides with a bearish kind of low in price, right?
Exactly. Typically, this is what you guys are used to see. You have it as a panel below your price, right?
Yeah, like a MACD or a RSI or whatever, or a composite. All of those indicators that I use and showcase in my macro insight calls.
That's exactly what it is.
Okay.
Right. So if I go look at the spectrum, and as we say here within the spectrum, I'm just going to make this a little, I need to take this out. Okay. We're identifying the peaks. So the length of the cycle length of cycles that correlate best with the pattern of peaks and troughs in that detrended oscillator.
Mm-hmm.
What you will notice here is that you got this bunch of peaks in this region here,
Mm-hmm.
right? One from around 100, I call it 180 days to about 300 days. And there's another bunch of peaks at the back end here. We'll call it 3 peaks. Okay?
Mm-hmm.
So about 7 or 8 peaks that it's identified. Those would be the ones worth investigating. I've got 3 that I have marked over here, right? And I've picked them just by identifying the peaks, right? I just go in here and I pick that, and the application takes them and to create the actual composite cycle that I want to look at,
Mm-hmm.
right?
Yeah.
In this, you can see my 580 day is right there.
Right.
You can see him marked here.
Mm-hmm.
The other 2 cycles are related to it, mathematically related. One is exactly half, right? And the other is another fraction of it. But let's focus on the long-term one, which is this 580 day. I'm going to pick it and then look at it on our price chart. And even if we take it to sort of the early days of Bitcoin, the point to make here, this green line that you see
Mm-hmm.
is extracted from the behavior of our detrended oscillator, right? It's essentially we've picked one of the most dominant cycle periods within the blue line. And then we've plotted the sine wave or sinusoidal wave that comes from that. Therefore, you will see, certainly historically, because that's what we're doing, describing history, you will see that many of the troughs within the blue align with the green.
Mm-hmm. So you're trying to decompose that blue line into a a predictable cycle, basically, which is based on time periodicity. Yeah, that's what you're trying to do, right? So totally makes sense that they should coincide, because your green line is basically being extracted from the data that you have of the blue line, and you're trying to pick up a pattern basically in that. Is that fair to say?
Well said. Yeah, that is exactly what I would say.
Okay.
In terms of a trading view, you would then have, it's back to the point we made in the beginning, where you say, once you've observed what you believe to be a dominant cycle, assuming that it remains dominant,
mm-hmm.
you could structure trades based on, or certainly based on where you are within that cycle. And there's some basic descriptions we can make of what we're seeing from this 580-day cycle, right? We mentioned those major cycle beats or major troughs in the oscillator that occur every 580 days.
Right.
The next one of those is not due until the end of this year.
End of this year. Okay.
End of this year, so December 2022. But what we see is halfway through the cycle, right? What we observe is what appears to be, let's call it a mid-cycle panic.
Yeah.
Right?
Where
there's another trough, pardon?
Where that green line comes down in the middle, basically.
Exactly.
Right? Yeah.
We find another trough, but maybe not as violent, in the middle of that 580-day cycle, which is not surprising given that we saw that there was also another cycle that the application picked, which was exactly half. There we go, 290.
Mm-hmm.
That's where we're seeing this mid-cycle panic.
Right.
And interestingly, the next one, the cycle beat, is due mid-February, this current month.
So yeah, but I mean, I guess the point is these are not perfectly going to pick up the time.
Absolutely not, right?
So you could argue
it could be before, it could be after.
Yeah, like we could well be having that mid-cycle panic, already had it in January, right? But what it's saying is it's coincided. It's interesting that sell-off from 65K to 35K, which is a significant drawdown of 50% or whatever, has happened to coincide pretty damn closely with this mid-cycle beat down in this cycle that you've picked up, basically, right? That's the interesting observation. Right?
Exactly.
Right.
I mean, we can zoom in just to make that point a little bit.
And what's even more interesting, maybe, is what happens after the mid-cycle panic.
That is very interesting, right?
Right.
Because historically, post that mid-cycle panic, Bitcoin has had a lot of parabolic moves higher. If we start going back in time, you tend to see that a lot of these parabolic moves come in that last half of that 580-day cycle period, right? And that is potentially what we're looking at here.
Because we're going to enter that period literally from end of February, right? I guess.
Exactly.
Yeah. Okay.
Right. This zone here historically has been where we get the parabolic move higher in Bitcoin.
And the move that we saw like in 2020, like obviously the sell-off, and then towards the end of 2020, that was parabolic, right? Going from 15K to 45K in a matter of months. Where does that fall here, right? Early 2020 rally in price. So
early 2020.
Early 2021. So that parabolic move, where did that sit? So that coincided with the upswing that we're talking about, basically, right?
This one here.
Yeah, so the middle of 2020.
So that's our mid-cycle panic there.
Okay.
Right? That sort of period. And here is the parabolic phase.
That parabolic rally. So yeah, so we're basically saying that's kind of the thing that we're due again, basically, right? This parabolic part of the rally where it can do it has done like a 3 to 5x, right?
Yes.
We're entering that period. And how long is that
on this chart, I'm showing you, I think, 3 of them. Here's the one you're talking about. Here's another parabolic phase here. And here is
there's a lot
before that.
There was a lot of chop in that one though, right? I guess. Well, there's a lot of chop in the oscillator, but maybe not in the price so much. Price.
Yeah, exactly, right?
Yeah, price was
very. So what it's saying is the behavior within this period is where you get these parabolic moves, right? Parabolic move. And
the length of time that those parabolic runs typically last is we're talking what, 3 months or something, right?
Exactly. Call it 3-ish, maybe to 5-ish months, roughly speaking.
5 months. Okay.
Right.
There's a little bit of hope for the crypto bulls emerging from this conversation.
I'm not in the business of giving hope to people, but we are saying that historically, that seems to be in a pattern. Those parabolic moves tend to happen with that 580-day period periodicity. And they tend to be followed by as dramatic a collapse straight after.
Which is basically saying this is going to be a choppy year for Bitcoin, right? If this has got any predictive value, and let's be clear, the statistical significance of a 7-sample backtest, which is what we're talking about, is 0. But Bitcoin, a lot of people think it is a very cyclical thing. Like you said yourself, you think this is the most cyclical thing you've looked at, right? The fact that you can say that off only 12 years of history is quite interesting. Now, one of the reasons why a lot of people think Bitcoin is super cyclical is because of this halving cycle, right?
Yeah.
Which a lot of people talk about. And it's the fact that embedded in the code, embedded in the definition of what Bitcoin is and how it's mined into existence, every 4 years, that supply that's coming gets cut in half, right? And we typically have these big bull runs post a halving cycle. So we literally, that mid-cycle panic that you talked about typically happens just before the halving. The last halving was May 2020, happens every 4 years. Okay, so the next one, actually, next halving isn't until 2024. So that's quite a long time away. But it's interesting because that has been kind of touted as one of the reasons for this extreme cyclicality that we seem to see in price movements in Bitcoin. But the cycle you're picking up from doing some quantitative analysis is quite a different cycle, right? We're not talking about 4 years, we're talking about 580 days, which is more like a year and a half. So I think that's the kind of new piece of information here that maybe some people have not seen or have talked about before. And what it does is it basically presents a picture of some serious swings that could be happening this year, where we do finally make a low sometime in February,
possibly
this month. And we could have quite an impressive run to maybe back to the highs or even through the highs at some point over the next 2 to 5 months. And then we have a nightmare into the year end, right? So look out. I mean, for those of you who are trading crypto, look out. One kind of saving grace would be volatility is cheap. For the type of swings we're potentially seeing here, the parabolic nature of the rallies that you get in this period, the collapse, the fact that crypto vol's trading at 60, 70, to me doesn't sound bad, right? So being an options trader, that's something I'm going to be getting very interested in looking at to set up for some of these cycles. But it's really good now that we've seen that on the screen. We know what to look out for. And if we do see some sort of bottoming price action in February, setting up for some upside might look pretty attractive. I mean, is that something you're going to do? Are you going to be getting involved with some upside?
To be honest, I'm already nibbling, right?
Right.
I've already started nibbling away at, getting some upside exposure in June. June looks like the best expiry to play given what's available in the crypto options markets.
Yeah, it's that sweet spot between not too long dated and hence the premium is going to be very high, but gives you enough time for the rally scenario to kick in, basically, right?
Absolutely, because imagine we do get that perfect parabolic type move that has happened in the past. But what you may have noticed when we're looking at that chart is that the really parabolic phase doesn't come towards the end of that period, right? So you might start getting a rally, but it's sort of gentle. It could be gentle for 2 months, maybe 3 months, and then it's really in that final month of that cycle period when things go ballistic, just absolutely nuts.
I know you don't like to fit a narrative to any of these swings, right? But I love it. I love doing that. Okay?
You love a narrative.
My thing, right? So I quite like that narrative. Like if you look at what's happening right now, we've been selling off, okay? And the actual, whilst we have had the occasional day of like a sharp crash, the implied vol hasn't been spiking on the way down, okay? No. And that is kind of a sign of there's not actually that much panic in the market. And there's kind of like, there's someone on the bid who's kind of supporting the market, like preventing it from absolutely falling out of bed. And the idea was the whole of last year, you had institutions jumping through hoops to get approval to allocate into crypto and into Bitcoin specifically, right? And then if you look at some of the on-chain metrics that I've been looking at recently, the share of large transactions, like above $10 million clips, is fairly high, right? So as the price has been dropping, big clips are still trading. So it's a sign, and we know that the short-term holders have been panicking out of this. That typically tends to be a retail type crowd. Yeah. Retail stocks have been getting destroyed. Like meme stocks are down 50 to 80%. So we can see there's a retail flash out happening. But in crypto, if big clips are trading down here, the instos are soaking that up, right? So right now, the instos are sitting on the bid, soaking up this weakness in price, allocating gradually. If this market starts to turn, there may still be a lot of instos who were being patient, who start to think, oh, okay, this thing's turning. I need to finish off my buy order and start actually chasing this thing a bit higher over the next few months. Because a lot of people, like Raoul Powell said, he thinks instos are going to allocate in Q1 or wherever it is. So you've kind of got the recipe there for once we see a turn, that you may have a load of instos who are trying to be cute and sit on the bid and think they're going to get filled, are like, well, we haven't bought what we need to buy, and they come in and kind of push this thing higher, basically, right? And then the narrative I would attach to, once you get that parabolic move, all those instos have piled in and almost rushed to get their allocation into crypto because they don't want to miss out, so they're FOMOing in. You then have the fundamental macro backdrop has been deteriorating and is going to deteriorate more in terms of inflation and growth rolling over in the face of a tightening Fed that could just take all risk assets down by God knows how much by the end of the year. And there comes your crypto collapse that lines up with your bearish side of that cycle beat, basically, right? So there's definitely, I can see a picture which would line up with what that cycle looks like, and also has that narrative behind it. Who knows if that's how it plays out, right? But this is what I like to do, right? Try and play out in my head the type of scenarios and narratives that could drive these moves. You just like to observe the moves and trade the moves without any judgment on that, which is fair enough. But that's my 2 cents, right? And you don't have to agree with it or disagree with it, right? Each to their own. But anyway, with that, I think we've taken up enough time. Always great to have you on and see what crazy quant number crunching is going on in that brain of yours, and what insights we can glean about what may come next. But yeah, thanks for coming on, man. And I hope everyone found this one informative. We did get a bit technical at times, but you're not going to hear any of this anywhere else, I don't think, right? So make the most of it for those who find this type of content enjoyable. Like I said, watching this on YouTube is where you're going to get the most value, because you get to have a look at the charts and see what we're talking about. Kay, you can follow Kay at Trading Shinobi on Twitter, and there you'll be able to find the links to the blog posts where he puts his views about the market, and he'll probably put something up about these Bitcoin cycles that we've been discussing. So with that, we'll call it a day, and thanks for listening.
Catch you later.
Thanks for joining us today. I hope you enjoyed the episode. To learn more about Options Insight and our trading community, please visit us at www.options-insight.com, or you can subscribe to our YouTube channel and also follow us on Twitter at options_insight. Until next time, thanks.